Thank you for joining me this morning for this pop-up live trading session. Let's jump right into it. Let's discuss the markets really quickly. It looks like the market is going to reverse from yesterday. Really interesting how much we were up yesterday. I would think that we would be at worst case scenario flat today, but we are near the lows of the day, which is interesting to me. That could be a good thing. Maybe we're going to have some two-sided action. We'll go up, we'll go down. As you've heard me say in the past, that a market going up too much is an unhealthy market, and obviously a market going down too much is an unhealthy market. So if we can have some two-sided action, that would be awesome for us as option traders, because then the data will kick in and we'll make that monies that we receive when we sell options. Because the theta is how much you make in each day based on time decay. All right, so let's talk about a few things regarding some trade ideas and see if we can put some trades on. I sent out some trade ideas this morning. I sent out about 9 of them, and let's jump into some of those. The first trade idea that I was looking at this morning is Apple. If I can get this to work here. All right, so you can see that Apple is below its 200-day moving average. This is this bluish line. It's in the middle of its 250-day moving average. The blue line is the 50-day moving average. It's below that, and it's a little above the 200-day moving average. Let me hit mute. If you have a question, please unmute your mic at any time, but until then, keep your mic muted, please. All right, so this is Apple, and what the trade idea that I had on with Apple this morning, we're going to look at this on the Thinkorswim platform for the first time in a while. I was looking at selling, give me a second here, looking at, and this was one of these yellow trade ideas, looking at selling the 145 call. Might have to adjust that a little bit now based on how Apple is going down. So selling the 145 call and buying the 155 call, which is right here, and that's not a lot of premium there. It's only $48. And then on the put side, selling the 110, and that's like right here, and buying the 100. So 10-point wide on both sides, and let's see how that looks. All right, so must have did something wrong, because it shouldn't be custom. All right, let's do that one more time. Let's sell the 110 on the put side, buy the 110 on the put side, and then that's $72. And on the call side, sell the 145 and buy the 155. So we're going to sell the 145 and we're going to buy the 155 here, and that's going to give us 119. What I was looking at this morning, I said at least 118. So it's basically around the same price, even though Apple has fallen a little bit more. All right, so looking to do this trade, if we hit review here at 120, you can see that it's requiring 100. I mean, we're receiving $117, and it's requiring buying power, which is regular T margin, $882. So we want to receive at least 12% on our capital. So if we do the math on that, that's going to be more than 12%. We got the 117 divided by the 882, and that's about 13.2%. So I'm going to send this one, and we'll see if we can get filled. And if we can get filled, that'd be great. All right, so we just got filled, and what I said, this is, even though this is an iron condor, I said we can hedge in using the QQQ. Right? Even though it's an iron condor, I'm going to hedge this based on how the market has been recently. So that was 45 days ago. We got filled on that, and now I'm going to go into the hedge. I'm going to go hedge this with the QQQ, and I'm going to buy a hedge at the 30 delta here, and I'm going to do a 1-point wide, just buying a put spread, and it's going to cost about $20. We can use about up to $30, a little over $30, because we received about 120. We received about, after fees and commissions, about 119. All right, so let's send this and buy this hedge, and we got filled on that. And the hedge, so basically, everyone, the hedge is the max loss before the premium that we received was $1,000 because we had a 10-point wide spread on both sides. You can only lose on one side. So the max loss was $1,000 before the premium we received, right? So we received about 119 in premium, okay? After fees and commissions, we received about, actually it was 117, right? So it was 117 that we received. And so you take the 1,000, right, minus the 117, and you get the $883 is what your max potential loss is. And then we hedge out that risk that we just did. So we can make up to $100 on the hedge, right? So you subtract 100 on that hedge, and so the most we can lose on this trade is $773. Okay, so that hedge, to figure out how much that hedge took out of our max risk, you just take that 100 divided by the 883, and it took out 11.3% of the max potential loss we hedged out by doing that hedge. Okay, so this is how it looks now. We only have we only have 2 positions on in this account. We have this really speculative position on bots. It's like a cryptocurrency play, and then we have obviously what we just put on right now, which is the Apple, and this was an iron condor that we put on, and we hedged the put side on that iron condor indirectly. Apple is one of the components of the QQQ, which is the NASDAQ 100 is technology stocks. So we hedged that just in thinking, just in case if Apple continues to fall, then we have a little hedge on that. I don't think it's going to go back up to the 145 within this time frame, and how long we're going to keep it on. It could, but just betting that it will not. So let's go over here and just show you where that Apple's high was. So Apple's high was the 145, as you can see here, and that's where our short strike is on the call side, and that was probably hit on 125, right? So that was over a month ago that it was hit, and it's below this 50-day moving average, so they have to go up quite a bit. So let's just see, it's trading right now at let's just say it's 126. So say if it went to 145 minus 126 divided by 126, which is what it's currently to try, it would have to go up 15% in the next 45 days. If we would hold it to 45 days, we're not. If we look, I'm going to go over to TastyWorks platform right now, and just to look at the seriously earnings. We know earnings just came out, so we don't have any earnings to worry about. We don't have any binary events to worry about besides the Congress passing the stimulus package of 1.9%. That could be a stimulus or a catalyst for the market to go up again. And if the market's going to go up again, Apple's going to go up again as well. So we'll see, right? We'll see how that plays out. I love that trade though. We're going to take it off once we've hit 50%, including fees and commissions. All right, so any questions on that trade, why we're doing that trade, and why we hedge that trade? Okay, hopefully I clarified that, but if you have any questions, please unmute your mic and present that question. All right, so the next trade that we had on there, that was one of the highlighted trades. Another trade that we had on that was a highlighted trade was this bullish bear strategy. And on the TastyWorks platform, you have to do this type of trade as two trades, unfortunately, when you're doing options on futures. You do not on Thinkorswim, but if you're not trading 2 accounts, then it makes it a little problem right now for TastyWorks when you're on options on futures. But this is the bullish bear trade going in with 45 days on this one as well. And then what we were doing is buying a put spread first. This is the bear part of the bullish bear strategy. And we're going to go over here and we're going to the 12,580. We're buying that. We're selling the 12,570. And that's the bear put spread there. And then we are selling a put spread, which is the bullish part. We're selling the 11,690. So the 11,690, this would, as I mentioned to people before, from the high of the NASDAQ 100, 12,500 would be a 10% correction. So they would have to go down almost another 900 points or so for you to have a problem with this trade. So we're going to go to the 11,690. That is right here. Let me bring that up a little bit more here. All right, so that's here. We're selling that, and then I believe we were buying the 11,610. So we're buying there. All right, so I was looking at it this morning at 650. It's jumping around right now. Maybe you can get it at 750 now, which is good, even maybe 715. And if you hit this review here, it's going to say this strategy is not supported, right? So in this case, if you have this strategy that's not supported, what you do first is the buy of, you do the buy first, okay? You do the buy of the position. We're going to do this trade. So we're going to buy this side, and I don't like to have to do two trades, but we're going to buy it. And keep in mind, we're trying to get 775, right, or 750. So let's go back up here. That's the buy. I'm going to hit review, and I'm going to send that, and that got filled immediately. So now we're going to go, and that was 275, right? So we were trying to get like 250, right? So minus the 275, I think it was. So 675. We want to get at least 675 on this. Let me see. All right, so let's go over here on the put side. We had 11,690, I believe. All right, and then we are getting here. So this is 10. So there we go. So 10 minus the 275 that we had. 10 minus the 275 is the 725. So let's go. Let's see if we can get filled at here. I like this price. We're just doing one contract. Let's see here. Let's send that and see if we can get filled. And obviously, they're not going to fill us on the short leg immediately like they did on the long leg. So I'm going to put this down just one more time, and I'll be okay with that for demonstration purposes here. I'm going to send that, and hopefully they will fill us at that price. Come on, give me some love here. I want to get filled at the 10. It's kind of and it's because this has a built-in hedge already. We do not have to go and hedge this again. Okay, this is the built-in hedge is the bear part that we already have on this. So all right, so I'm not going to have this. I'm not going to wait for too much longer. We're going to drop this down. We're just going to, you might be able to get a better price, but we're going to get filled by doing that. And we're already down a little bit because we couldn't let it come to us, but that's fine. I'm going to show you this really quickly. This is the trade here. We received in credit after everything 140 minus the commission of $10. So you got the 140 minus the 10, that's the 130, right? And then you got the minus the 3, let's just say 350. So we collected about 126.50 on this. Okay, so that's not bad. That we collected at least, we want to collect at least $100. We collected 126, so that's good. And the buying power is way over 12%. As you noticed, the buying power that was required was about 300 and something, a little under $400. So we received way more than 12% on our buying power. We once again do not have to hedge that because it's already, the trade already has the built-in hedge, right? That's why we call it the bullish bear strategy. All right, so those are the two yellow trades that we sent out, yellow highlighted trades that we sent out in the trade ideas. We've just executed both of those, one in Apple, one in the NQ, and then now we're going to look at some of these other trades that we were looking at. I sent out one on Airbnb this morning. Let's look at the chart on Airbnb. You know that I like Airbnb. I've been talking about that for a while. So Airbnb has been, it hasn't been a publicly traded company, or it's only been a publicly traded company for less than a year. So, but I'm super bullish on Airbnb, and looking at this chart, it's you know, it's pretty, it's a little bit bullish chart, but I believe this is going to continue to go up. So I'm going to the Airbnb here, and this is the trade I would do that I sent out earlier. 45 days, again, giving yourself a little time. So if we have a lot of volatility in the market, it's not going to affect the 45-day as much as it affects something closer. All right, so if we have, I'm looking at selling the 155, which is the 13 delta now, and buying the 145, so 10 points wide. I was looking at this for 152 this morning. This, you can actually get it for about 166 as the mid. If you do this, I'm not going to do this trade, but if you do this, I like this trade, but I'm trying to stay small in this account and not put on too much stuff already. But I like this trade, and if you would get this, you would take up to 30%, or you can just decide to take $30 and go into the QQQ like we did before, and like we did on that Apple, and then just go to the 45 days and buy the 30 delta to hedge, and just do 1 point wide like this, and you will be able to get your hedge on. We talk about this in lesson 8 of the Dorian Way School. We just updated that information, as I've been saying for the last few days. Please take a look at that. It'll kind of give you all the reasoning why we do these hedges and what levels we do it at. All right, so the next trade I have is on EXPI. This is a Duvel type of trade that's been doing really well. It's split, and it looks like, you know, after it is based on the split. Before this was based on the split, they have to on this chart figure out what was the high after the split. So it's $90. So it's a little off that, but it's been a pretty good trading vehicle. And Duvel believes it has a lot more upside to it. So this is thinking about doing a poor man's covered call in this, and this is how this would look. Okay, and this is just to get some upside. Go out to 199 days and buy the 67.5. That's what I was looking at this morning. So it's already dropped, right? Because this was at the money this morning. So you can probably even get it better you can probably go to the 65, but I just say we go to the 60 based on the trade idea I sent. We go to the 67.50, and then we buy, and we go to 45 days here, and then we sell a call at the 85 strike. So I was saying this morning, no more than 13.50. You can still get that for 13.50 now. So this is a poor man's covered call. If it shoots up, you'll stop winning at 85, strike 85, if it shoots up within that time, within the next 45 days. If it doesn't, then you'll sell another call, and you'll sell it based on where the strike is at that point. Maybe you sell it again at 85. Maybe you sell it, maybe it's went up and you sell it, you have to sell it at 95. Whatever the case may be, it's a covered call strategy, a poor man's covered call. You use an option, a call option, as your shares, and then you sell calls in the front month. Okay, that's what a covered call is. All right, so let's clear this one here. Really like this trade, and that's now go to another kind of Bitcoin type of play this morning. This is a marathon, and I was looking at doing, just to change up the days, the expiration that we're providing, going with 38 days here and selling a put spread, but be a little bit aggressive on this put spread, because it's not a lot of options that they provide. They stop providing strikes here at the 20 strike. So in this case, we're going to sell the 27. Where is that at? We're going to sell the 27, and we're going to buy the 20. Get this to work here. Come on. All right, we're going to buy the 20, and I was saying this morning for at least 215. It's dropped since then, as you can see, and you can get it for mid price around 272. This is actually a really nice looking trade with 45 days to go, using $425, and it's only a 22% chance it's going to drop below there. And I just like it. Let's look at marathon here. I might even do this one on here. Let's look at MAR. All right, so the high was 49. The 50-day moving average is 23.92. So we'll be at the 27 strike. So that's above the 50-day moving average. And you can see obviously the 200-day moving average has been, under $8. So this is shot up. This is a lot like Riot, right? If you wanted to hedge Riot, you can use Marathon here to hedge Riot, because they kind of go in the same. They're kind of going up the same amount and going down the same amount for the most part, right? If you want to have a decent hedge, it's like selling Ford and buying GM or vice versa. All right, so I like this one. I want to ponder on this. I don't want to use too much more of the capital in this account, but I really like this trade, so I'm going to ponder on that one. That's why I put it on one of the trade ideas, but it's really enticing me more now that it's you can get around the 270, 275. Really enticing. All right, so the next trade really quickly is a bullish bear strategy in the RTY. You can see that the RTY is leading the market down percentage wise today. If you can, maybe it's hard to see this, but that's down 1.5%, a little over 1.5%. Everything else is down no more than 1%. So going with the 45-day strategy, and then this bullish bear strategy is going to be a little different. We're going to go 1 and 2. So in this case, we're going to buy the 2135. And that's here. This is a 33 delta now. It was a 31 delta when I looked at it earlier. Sell 1 point lower. This is the bear part, once again, of this strategy. And then down here, you would sell 2. So I'm going down to the 1975, and it was a 15 delta, is now a 17 delta, and buying the 1955 and doing 2 of those. And this morning I was saying do this for at least, and where's that at? Do it for at least 350. You can get it for 370, 380 now. And I actually like this trade. The buying power effect is insignificant. I might do this one as well. And actually, I am going to do this one, but unfortunately, I have to do it at 2 trades. So we're doing it as 2 trades. Keep in mind, we want to receive at least. Let's make it come to us, right? Let's put $4. Let's get $4 out of it, 4.00. So we're going to cancel that. We're going to buy this one first, like we did before. And we're going to see if they're going to fill us. And it's working. Come on, where's that position at? Where's that working at? It's off. Why is that? Where did it go? Let's go back to here, see the activity. Something is wrong. It says working 45 days ago. Looking at here, I don't see that position. That's the 13, excuse me really quickly, everyone. And I don't like that it's not showing. Something's off. So let's delete that for a second. And then let's see if we can do it again. Could be just a TastyWorks issue and I need to log out and log back in, but we'll check this. We'll do this again, hit similar here, and then we'll hit send. And let's see if it's showing. So now it's showing. So I'll show you here. So now it's showing it's working. So, all right, so we're gonna let that bake for a second. And what we're gonna do is go on to something else, and we'll come back to this in a second. Let that bake. I don't want to force it. So my next trade here was a Bionic Bull strategy in Halliburton. I'm betting that oil will continue to keep a bid, and this might go up quite a bit. You can see it's at its 1-year high for right now, and it's been doing well. It's above its 50-day moving average and way above its 200-day moving average. This is gold line. And so I like the price on this, and I think this can be a decent little Bionic Bull perhaps. So I'm going out to 80 days, I believe we have. Yeah, 80 days to expiration, and then buying. You can get out of this even before earnings if you wanted to. And so in this case, buying the 24 call, it was a little closer to at the money at that point, and selling the 23 call and this was out of the money when I did it before. You can see that this is a credit. This is a bionic bull. You're getting a credit of $75. That in the buying power effect is not too bad. And then if you jump over here, look at this curve view on this bionic bull, you can see that you have unlimited ability to make up onto the upside, because it's like buying a call for free, right? It's like getting a call for free. You're not buying it, you're financing a call, and you do have a little room to the downside for it to go down. As you can see, this is the at the money. It's not a lot, but you have a little, and this is the win zone. Obviously, you can lose if it goes down, and if you, in this case, it's not too bad to take ownership of this Halliburton if you wanted to. All right, so this is, or we can switch this around and do something a little differently than what I was showing. You can go to the 23 and you go to the 22, and that's a debit though, don't like that. You can go to the 23, and that is a $34 credit. I like the first one more, but this is not bad as well. All right, so please interrupt me at any time if you have any questions about these trades. All right, so last thing.
Can you just explain this a little more? I'm not aware of bionic bulls. So like this one will, like, you're buying the free call and it has unlimited upside?
Yeah, you have unlimited. It's like doing this right here, right? So when you buy a call, you have theoretically unlimited upside potential when you buy a call, right? But when you buy a call, it costs you money. In this case, it would cost you $224 if you bought this call outright, right? Or $218 if you do the mid, and that's what you should do. But
Right.
if you sell a put or put spread to be able to finance that, then you could get that call for free and just have nothing but upside. So that's why we call it a bionic bull. Ernie named this or created this trade, and then a lot of the members Ernie came up with a name, one of the choices, and the members decided that the bionic bull, it should be called the bionic bull. So anyway, this is one of those type of strategies that we try to use to be a buyer of a stock, but not to actually pay for it, right? Because paying for things is kind of against our temperament, right? Against our nature.
Right.
Not that we don't do it, right? Because obviously we buy hedges, but we're paying for those hedges through the premium we receive. But anyway, with this example, you can sell this, and this is you're selling it, you're selling the put, and that's creating a credit. So that's why it makes bionic, because you can win if it does nothing. You don't have to worry about time decay. Actually, time decay is your ally in this situation, because you are receiving a credit of $34. So you didn't have to pay for that if you did that. Or you can turn this into you can see that if you do a bionic bull, you have risk all the way to zero. That's if it went to zero, if Halliburton went to zero. We don't think it's going to go to zero. But what you want to do, what you also can do is do a put spread. So let's just say that's 2, that's 3, that's 5. Let's say you did a put spread of, and you're trying to finance it, did several put spreads to finance it. So that is right here. This is 2 put spreads that we did, and you can see now your max loss goes to 900, right? Instead of this all the way to 0. And then you still financing this call, so you still have unlimited upside, as you can see here, right? This is still a bionic bull, just a modified bionic bull. This is the at the money. If you start losing, you'll stop losing at this put spread here, or this put strike here. Okay. All right. So let me try to explain that one more time for you and everyone else. A bionic bull strategy is buying a call or calls and financing that. So doing it for credit, using the put side, either primarily selling something naked on the put side, but you can also do a put spread as long as you can finance the buying of the call. And then that means you have unlimited upside, and you can still win even though the stock does nothing. Okay, you don't have to worry about time decay. Time decay is actually your ally because you're doing it for credit. This is what is called a bionic bull. Okay? Any other questions on that? All right, so if we don't have any more questions on that, that's perfect. All right, so the second to last trade I had, go ahead. All right, so let's move on. If we don't have,
Hey, this is Gary. No question, but can you show us that first trade you did just now? The first setup, I'm sorry.
the first setup, okay. Okay, the first setup was I believe was this. Yes, is it buying the 24, selling the 23, and that you're doing it for a credit of 75. And the buying power effect initially is $628, and the max potential loss if this went to zero is a little over 2,200. But this buying power effect, since this is a naked put, this buying power effect could increase if this starts to drop. Okay, if it starts to drop, dropping is going in this way, as you know, on an option chain. So this could, if this goes down, the buying power effect could increase. Keep that in mind. So a lot of times when you're doing a bionic bull, if you're going to do it this close, if you're going to do the naked put this close to the long strike, then you should be willing to take ownership of the shares at the strike price. Okay, and so this is a lower dollar amount stock, so it shouldn't be too bad for most accounts if you wanted to do this. Okay, just a trade idea. I'm not going to do this one this morning, but it's a trade idea I like. All right, so the next thing we have this morning is Qualcomm, and looking at Qualcomm with 45 days to go. If we go to the chart really quickly, everyone, looking at Qualcomm, and you can see that Qualcomm had it hit its high over here, just like everything else. Then it's been falling. This is the 50-day moving average. It fell almost to its 200-day moving average. So this is lying. It's kind of in the middle here. I am bullish on Qualcomm right now because of that fact. So I'm going to play the contrarian, and I'm going to, even though it's down, that's good today. I would sell the 125, which is now the 20 delta. It was less than that. So let's see, 125 by the 115. So you can see that you were getting at least 123. That's what I was saying this morning. It's still going for the same price. If you move this spread down to the, if you moved it down to the 120, 110, you can see that that changes the ball game. It drops too much in premium, so it doesn't meet our criteria. So we would in this case, we would have to go use one of those 5 to 10% of the time and go initiate a trade higher than the 15 delta. I like this 20 delta on this trade. And if you can get the 123 at least, and then if you do, you want to hedge this one again in the QQQ, because the Qualcomm is part of the NASDAQ 100. So it's almost a direct, but it's an indirect hedge. It's almost direct. All right, so the last trade that I have this morning is XME. I gave this trade idea a few days ago, I think, but now it's dropped a little, and you can probably get a better price and selling a naked put in this index. And so previously we said sell at the 36. This is selling at the 35. If you sell this at the 35 and collect at least one, I would put this in at 121 and let it come to you. But you can see that you're getting initially way more than 12% on your buying power. Your max loss is this. If it goes to zero, this is an index. It's not going to zero. And so I like this trade here for a play, right? It's only a 29% chance it's going to expire below the 35. So this could be a good speculative trade as well. And if you had to, you can roll it out. But right now I'm saying to own. If you wanted to own this index, this is a good play to do. All right, so someone has a question?
Hey, O'Brien, it's John.
Hey, John.
Hey, just going back to your RTY bullish bear trade, what were the strikes and the credit amount you were showing on that?
Okay, yeah. All right, so that's the one I was trying to get in right now, right? So it still hasn't filled. So this right here, the strikes, John, are the buy part, as you can see here, is the 2135 and the sell part on the bear part, on the bear spread, is 21.30. And you can probably do this as one trade because you're on the Thinkorswim platform. So, yep. And then the bullish part, the put spread that you sell is the 1975. You sell in the 1975, buying in 1955, and you're doing 2 of those contracts. Okay, you're doing 2 of those contracts, and you want to put it in for $4. John, you want to put it in for $4. So I'm actually going to see if I can get filled with that. I'm gonna try it one more time. I'm gonna put this price up, unfortunately, and they're gonna rob me, but I'm gonna try to get filled on it. I'm gonna try it on the let me remove that. I'm gonna try it on the 140 because it was 140 here a second ago. So I'm gonna send the 140, and they're still not gonna give it to me. Not a lot of fun. Let it sit. All right, so they're gonna probably force me to do 145, and we got filled at the 145. So now I'm gonna go down to the strikes we were talking about, the 1975 and 1955. It's a 16 delta now. I'm gonna do 2 of those, and so I'm gonna receive about. Let me just make sure. I'm just check something really quickly, everyone. On this one right here, we just got filled. It's gonna check the price. It's gonna look a little off, but I think it was around. It's not gonna be $5 more. I think it was around $74 that it cost. All right, so $74 that it cost. So now I'm gonna sell. This this 1975 by the 1955, and that's going to be for 275 right now. I'm gonna do 2 contracts of that. Let's see if they're not gonna give it to me at 275, but 261 minus, I think it was the 74. So we're getting 187 still, so not bad. So I'm gonna send this and see if they'll fill me. And you know, obviously they're not gonna fill me at the mid there. So I'm going to put it down one more time and see if we'll get filled at the 270. So I don't want to hold it for demonstration purposes. So we're getting 256 here. 256 minus 74 will be 182 if we can get that filled, and still no love. And all right, so now it's dropped to 265, and I don't know why it's dropped to 265 because it hasn't moved. So let's try this one more time. 251. This is the joy when you can't do it at the same time. All right, so that's the 175. Let's try it one more time just for demonstration purposes. We're gonna get robbed, but that's the robbing nature of this. All right, so we got like 260 minus. We can actually go to this here now and see the history on this really quickly, and you can see exactly how much we got after fees and commissions. I just put in the RTY M1, and just for today, we're just going to make sure it wasn't just today. We hit today here, and then you can see that this is what we received. We received this 187.50 minus the 15 minus the 522 in fees. So you got the 187.5 minus 15 minus 5.22. So we got 167.28 on the trade after fees and commissions. All right, so not bad. So John, were you able to get in that trade as well?
I'm looking at it right now. That's 45 days, right? Yep.
Yes, it's 45 days to expiration.
I may go down a little further on the
okay.
On
yeah.
the puts,
So
exactly. I think those are up at about 20 delta now.
So right now they're at. It all depends on the calculation of what Thinkorswim is saying. This is at the 16 delta for TastyWorks, and it could be something higher for you. So if that's the case, then yeah, you can modify it. You can always modify these trade ideas that we send to meet your temperament or meet your to make you feel better about the trade. And a lot of times things move, right? And when I sent out a trade idea, that's where the price was when I was looking at it, right? It could be better, it could be worse, and once you get the chance to look at it. Okay, so
That's interesting that I didn't realize that the deltas were going to be different on Thinkorswim than the Thinkorswim versus the Tasty trade.
yeah, so are you using probability in the money or delta?
I am, yes.
You're using which one?
I'm using probability in the money on Thinkorswim, and at the 1975, it's showing a 20 delta or 20
Okay, so yeah, so
probability.
probability in the money and delta are a little different these days, especially through the different platforms. So, but it's the same thing, right? So I'm comfortable with doing the 1975, John. But if you're not, then move it down. But your credit is going to be a little less, right?
Sure.
And then make sure because Thinkorswim has been a little weird recently. Put the price in a little higher than what the mid is saying initially, and then just work it down to the mid. Okay.
Yep.
Down a little.
Okay. Yeah,
Okay.
I've been burned on that before. So.
Yes. So don't get burnt on that, because that's really frustrating. So with that said, everyone, this is going to unless we have any other questions, we're going to conclude this pop-up live trading. I will send out this recording a little later, but any other questions before we conclude? All right.
Brian,
Really quick.
Yes.
Yes, on the TastyWorks platform, when you try to put in the strikes or when you highlight them, I get quantities of 100, and then I change it, but it doesn't. It wants to change the whole thing to two strikes each, or two of each. It doesn't let me do like the hedge as one, and then one contract, and then the bearish part as two contracts. It has everything as two contracts.
Okay,
How
so
could I change that?
if you were on the call, maybe you came on the call a little late. You're gonna have to do that as two trades, right? You're gonna have to do the bear part first,
Right. Never mind.
and then you're gonna have to do this. But if you were doing this on options on stock, you can do it as one trade. But what you would have to do is highlight the one that you want to change to two. So like I'm highlighting it here, as you can see, and then you change that to two, and then it won't change the other. It'll keep the other one, the other leg, or the other spread as one. Okay. You have to highlight the legs that you want to increase or decrease the quantity. Are you following me?
Yes. I did that earlier on with the NQ trade. I don't know why I didn't remember on that. Okay. Thank you.
Okay. You're welcome. No worries. All right. So any other questions before we conclude?
Yeah, just one more question. I came in late. How soon after our meeting would you send this out?
How soon after this meeting I'm going to send this out? It's going to be, good question, Gary. It's probably I'm going to try to get it out as soon as possible. I'm going to try to get it out within the next 30 minutes.
All right, great.
Okay. All right. So we did 2 to 3 trades in this account this day. So, and they all came from the trade ideas. We did the 2 yellow trades, and then we did the 2 yellow trades, and we did the bullish bear trade in the RTY. So we did an Apple, we did a NASDAQ, and we did an RTY trade. And then we looked at all the other trade ideas that we sent out today. And right now, because I am, we're going to do one more trade. We're going to do this Ethereum. We're going to buy some more to get the one coin because it's just dropped again on us. It's down 4%. I wanted to get that drop. It's funny that these currencies, these cryptocurrencies have been following the market recently, you guys. And the market's going up, it's going up, and the market's going down, it's going down. But anyway, we're going to just a little, observation of what's going on. All right, so give me a second here, and I'm going to do one more trade. We're going to buy another $100 of this and Ethereum, and boom, we just got filled in that. And so now we have more than one coin, okay? Because it's currently trading at 500 basically, and we have 531. So if we jump over here, if you're on the TastyWorks platform, you can also see how much you have, right? So here it says positioning coin, right? So it's saying we have a little over 1 coin now. So that is what I wanted to get in here. So we'll see. We might add more if it drops significantly more, but at this point, I'm comfortable with what we have